Welcome all of you. For those of you who have not attended one of our Lunch and Learn webinars before, this is our monthly board learning series where we present topics that we think are going to be important to our clients. Today is 10 Steps to Understanding EJF's Monthly Financial Report. We are excited to be joined by Sam LeBlanc, our CFO, who will present on the topic. Couple housekeeping things. This is a webinar, so everybody that is attending will be on mute. I'm going to monitor the Q&A session as Sam presents, and if your question is timely and fits into the discussion, I will ask Sam and he will be able to answer you live. Otherwise, we will have a Q&A session at the end as well, and you can drop questions into the Q&A section. If you need to leave early or if you have a board member who wanted to attend and couldn't make it, we will be posting the webinar to our website along with the slide deck, so you can refer back to it or you can share it with other members of your board. If you have any suggestions for content you would like to see us present on in the future, please feel free to drop that in the Q&A. We're always interested in what you'd like to hear about. So with that, I am going to go ahead and turn this over to Sam for 10 Steps to Understanding EJF's Monthly Financial Report.
Hi, everybody. Thanks for attending today. Really appreciate your time. I am the CFO here, so ultimately I'm responsible for putting these reports out and trying to get them to be as accurate as possible for you. The financial production and the financial services that we offer are a large part of our contract. We obviously take our responsibilities seriously. We understand our fiduciary responsibility and want to try and get you all as accurate information as possible. I also understand the reports can come out and they can be intimidating. Some of them are 70, 80 or more pages long, filled with lots of numbers. And if you're not a numbers person, it could seem pretty intimidating. My goal here today is to give you 10 items that you can look at on your report that if you look at, you'll get a pretty good idea of the financial health of your association. So I'm going to go ahead and get started. And Mira, if you'll move me to the first slide. So the first thing I'm going to talk about today is your NCB operating account and your cash balance. So NCB is the bank that we work with. And the reason we work with that bank is because it integrates directly with our software so that you get your balances updated every day. If you have gone to your board portal, you'll see that you have access to look at the bank account so you can see every day what comes in and what goes out, just like we do. You have a lot of access in that board portal, and I do suggest you look at it and explore it because you can really get a lot of information there. But the most important thing I want to try and talk about on your cash balance is that at the end of the day, every association is a business. And every business has to have appropriate levels of operating cash in order to operate. And that's particularly important for associations because we pay your bills on a daily basis, right? Bills come in, our managers approve the bills, and we write the check right there on the spot. We don't wait to the end of the month or pay bills every 2 weeks. We pay all the time. But in order to be able to do that and be able to send the checks out, we have to have adequate amounts of cash. So the key here is that what auditors and professional accountants recommend is that the cash level at the end of the month be between 10 and 20% of your annual assessments. 10 and 20% of your annual assessments. And so in this case, the annual assessment is set. Mira, can you make that number just a little bit bigger so I can see it? I'm sorry.
I don't know how to zoom it, but it's the annual assessment there is $282,323.
Okay, so $282,000. So 10% of that is $28,000. 20% would be $56,000. So we want your cash balance to be somewhere between those two numbers. I usually settle at about 15%. For 98% of our associations, if they can hit 15% or higher, they will not have a cash flow issue. We can pay their bills lickety-split and get the payments out the door. And obviously that's important because you don't want service disruption, you don't want late fees, you don't want all those kind of things. So 15% here would be $42,000. As you can see under the current month, and Mira, I'm sorry, I have to ask you to read that number for me.
current
What's the
month,
current?
the current month balance is $12,226.20.
All right. So if I were looking at this as a board member, I would want to try and say, well, that seems pretty low. And is that impacting our ability to pay our bills on time? And if I were a manager, I'd want to look at that number also. And I want to see, is that what's happening every month? So I might look back the last 2 or 3 months to see if this is an anomaly. Something could happen that would cause it to be low one month. But if you see consistently that it's at that $12,000 level, then my suggestion is that needs to be a discussion about how to increase that. What needs to happen? Why is the number so low? And what do we need to do to get it up so we have a healthy amount of cash in our account? We don't want to be paying our bills late. And what happens in our system is that if you can't pay your bills, then they go into a warning queue, and that requires extra management on our part and extra time on our part to then start managing your association's cash and parceling out bills when we can and trying to keep an eye on it, which is not really what we're supposed to be doing. So it's important to have that adequate cash levels for your operating account. All right, so it's pretty much straightforward math there. As to why this account is at $12,000, you should have a conversation with your manager and or one of the people in my department that can help you with that. And we do have a specific person, just to say this at this point, we have a specific person in our department whose job is 100% to reach out and talk to boards about their financials and help them understand them a little bit deeper if there are issues that need to be resolved to try and help you resolve those issues. All right. The next thing I want to look at is whether your monthly reserve contribution was executed. I think you all understand why reserves are important. In order to fund reserves, you need to be putting that money aside every month. 1/12 of your annual budgeted amount for reserves needs to go into your reserve account. And the easiest way to see this is looking in what I call the difference column. And you can see it in two places. You can see it on the difference column on the balance sheet. So that's the item on the left. And at the top, you have an NCB operating account and you have an NCB money market account. That money market account is where we move your reserves to every month. And so over on the left, on the right, excuse me, all the way to the right is a difference column. And that number should match or exceed the amount of your monthly contribution. Now, it may not do that all the time because if you spend money on reserves, then that obviously is going to change it. But you're not usually spending money in reserves. 85% of the time, you're just contributing to reserves each month and moving along. If you have a reserve project going on, then this may not be the best place to see it. You may have to look further down on the balance sheet. And if you look under the reserve equity section, and again, this reserve equity section is really important. This tells you what's coming into your reserve account and what's going out of your reserve account. This is kind of your income and expense portion for you to understand what's happening in reserves. And you'll see down there you have reserve interest YTD, that's year to date. So that would be the interest you earned in the last month and the current month. And it gives you, and the number is year to date total. And then you have a difference. So you can see what was added this month. The next line is reserve contribution YTD, again, year to date. And again, that difference column over on the right-hand side should match your monthly contribution to reserves. And if you want to see what that is, the statement on your left, the statement of revenue and expenses is where you would find that. You can see Mira's highlighted down at the bottom in the reserve section. It shows you how much you're contributing to reserves. And you can see in this case that the monthly contribution matches what it says on the balance sheet over in that difference column. So just make sure every month that you're making your reserve contribution. If you're not making your reserve contribution, the question would be why? Was it a mistake, or do you not have enough cash in your account? This goes back to that first thing we looked at, which is cash in your account. If you don't have enough cash in your account, then there are probably some other fundamental issues that we should be looking at. The third thing is accounts receivable. When we do your budgets every year, the budgets are based on a zero bottom line. We have your income and your expenses match. We expect all the income to come in, and we expect the expenses to be pretty close to what we budgeted, obviously. And we don't expect any real surplus or loss, but we do what we call zero-based budgeting. Unfortunately, sometimes people don't pay their monthly assessments. And so you do end up with accounts receivable. So you want to make sure you're reviewing this, because if you have a lot of accounts receivable, you're going to have issues where again, going back to that first slide we looked at about your cash, if people aren't paying, then you won't have enough cash to pay your bills on time, which means that requires more management on our part and possibly late payments on your bills because you don't have enough cash. So you need to make sure everybody in your association is paying. In addition to that, for people that aren't paying, we have an entire system set up to notify them. We have a series of letters that can happen, which could be going to a lien on their property and eventually foreclosure, which doesn't happen that often, but it does happen. But good accounts receivable management is important. So you want to make sure you're looking at these lists and understanding who's late, how late are they, and what actions are we taking to collect from them. So on the next slide, you'll see that the way you see this is on your balance sheet. That's the document on the left-hand side here. We have an accounts receivable section, and you have accounts receivable, and then you have AR. What does that say here? AR what?
That one says AR insurance claim for this particular
Okay,
association.
So that's a very specific issue. I'm not going to get into the insurance claim AR right now, but accounts receivable is where you're looking. And obviously what you like this to be is zero. That would be the best case scenario. If it's not zero, did the accounts receivable go up or down? Right? Generally, you want to see it going down because you want people to be paying the back amounts they owe. And so your receivables are heading down, which is what you want, not up. You can see in this case, they went down by a little bit between last month and the current month. If you want the detail in the latter part of the report, you'll get the page that you see on your right. It's the only page with a big colorful graph in it, by the way. So it's pretty easy to pick out. But you can see here what you'll get is you'll get the individual listings of people that owe, and it'll be aged. Are they 0 days old, 0 to 30 days old, over 30, over 60, or over 90? At each of these intervals, by the way, we are automatically sending them letters. When a person doesn't pay, they first get a friendly reminder. Hey, you might have forgotten to pay. Don't forget, please go online and pay your assessments. A second letter is when they're over 60 days, and it's a little harsher, that says, hey, if you don't pay, we may have to take legal action. You need to pay. This is a demand letter. The third letter says we're going to put a lien on your property, and then we put a lien on your property. So again, not paying over time, you get an escalating sense of letters. If a person can't pay, and sometimes there are legitimate reasons they can't pay, then what they should do is contact the manager and propose a payment plan. If you have a payment plan, then you won't get a series of escalating letters and you won't get a lien on your property. But ignoring the problem is definitely not the way to go. And so, again, yes?
We have a question. I think it's more policy, and so I'm going to leave it at your discretion as to whether it's good to answer it right now or if we want to hold or maybe contact this person. But the question is, should an association raise assessments to cover delinquencies? Like if you know you have a chronic delinquency problem, is it best practice to raise your assessments in the budget process to cover those delinquencies?
The answer is yes. If you know you're not going to have somebody who's not going to pay, then you need to plan ahead, because not putting in some kind of bad debt expense, which is how you would budget for this. You'd budget for bad debt. We don't think we're going to collect, $12,000 this year. You need to put that expense in there because everybody else is going to have to pay more, because your water bill is still going to be the same size and your electric bill is still going to be the same size. Your insurance, your expenses are not going to go down because one person's not paying. They're going to be the same. It's just the rest of their neighbors are going to have to pay for them. And, and that's why, of course, you want to take action. Don't let these receivables grow. You need to take action in 30, 60, 90 days and then move to foreclosure. You can't let people get a free ride. But the answer is yes. You should budget for that if you know you're not going to collect that money, because you need to collect enough money to pay your bills during the course of the year.
And again, Sam, I'm sorry. I know that we're kind of getting away from financials and interpreting the report, but because you said that, I wanted to highlight the importance of quick action, and that, there is a 6-month super priority lien in DC for delinquencies. Yes. So if you act quickly within the 6 months, you may not lose. You may be able to catch it before you lose, is all I wanted to point out there.
That's right. So what Mira is saying, I'll just reiterate, is that only in DC, not in Maryland or Virginia at this point, but only in DC, there is some court cases that happen that give the association's lien, because remember, an assessment is always a lien. That's what an assessments are, is they're liens. They're just not recorded until we actually go and record them if you're delinquent. But that lien has a super priority in most cases, so you should always consult with your attorney, but you want them to act quickly because you can get 6 months worth without really asking any questions. And if there's a mortgage, the mortgage companies are aware of this now. And oftentimes, if the person's not going to pay, the mortgage company may step up and pay. The point is, you need to take action. And so you should be managing your receivables, looking at your receivables and discussing them with your manager.
Perfect. Okay.
All right. So earlier, we talked about cash and operating cash, and we also looked at the reserve cash. So the next thing I want you to focus on is your reserve equity. So in the reserve equity, you want to make sure, obviously, that your reserve transactions were posted. We talked about this before, about whether your contribution was posted, if you earned any interest, it might be posted, and also if there are any expenses, make sure they're posted. Because that reserve equity section of your balance sheet is super important. It's describing to you how well or not you're saving money for future expenses and or what you're actually spending, which of course you should have already approved in some board meeting. And then most importantly is your reserve cash balance actually funded? Okay, so two things. Does it match your reserve study, and is it funded? So let's talk about first, does it match a reserve study? So in your reserve study is a chart, and the chart shows you cash at the beginning of the year, what you expect to save, what you expect to spend, and how much you should have at the end of the year. And so, especially at least during budget time, you should be looking at that chart in your reserve study and making sure that you're contributing enough so that it matches your reserve study. And then if you're doing that, you want to make sure that it's actually matching what you have in your reserve equity section. So let me make a real clear distinction here. Reserve equity is how much you should have in reserve cash. Reserve equity is how much you should have in reserve cash. If you don't, then we need to figure out why you don't. Okay, so again, this is the best case scenario is for this association, they have $465,000 at least in cash because all their reserves are fully funded. I don't think they have all of that. So you can see that their actual cash is only $233,000. So the amounts that they said they saved for reserve items, they've not been able to save it because they've had to spend it in other ways. And in this case, you can see that in their members' equity, which is negative, they've overspent. So they haven't budgeted enough, or maybe they had some unfortunate things happen. Lots of things can happen to make your members' equity negative, but that's your operating results. And so in this case, their operating results have chewed up more of their income than what they brought in. Therefore, they've had to borrow from their reserves to pay their operating expenses. And that's why it's important to look at this. You want to make sure your reserve equity, how much you should have, is actually matched by the cash that you do have. Because if you don't, then you need to put in place a plan as to how we're going to get this money back. Often that needs a special assessment, but you need to have a plan for it, because when you go to do your roof or go to do your elevator and you thought you had 465,000, but you only have 233,000, that could affect what your plan is and how well you can execute it.
Sam, two questions. How often should a reserve study be done?
A reserve study should be updated at a minimum every 5 years. And in some places it's required. So if you're in Maryland, it's required by law. If it's in Virginia, you're required also to update your reserve study.
Right. Second question, and this is for me actually. How do you make an adjustment on the reserve equity? So you want this to be 80% of the reserve study. This is an association I manage. This association's current reserve study says that they should actually only have about 285,000.
Okay. And so the question is, in the reserve study, do they say that they should only have 285 because there were projects that were not needed to be done? In other words, your reserve study could say that at the end of this year, you should have $200,000 because you spent $150,000 to do the roof. But it turns out your roof is actually in good shape. It's been inspected, and the board says, you know what, we're not going to do the roof this year. We're going to wait another 3 years. And so in that case, your reserve study says that you should have 200,000, but because you didn't spend the 150, you really would have 350,000. So you have to look at your reserve study and understand what's been completed or not completed, and you may have to make some adjustments.
Okay, but so is that something the auditor does, or should the board say, you know, our reserve study says that we only need 285 and our reserve equity says we need 465?
Well, I mean, you kind of got to look at it. I mean, generally, but when the study gets updated, those kind of adjustments will be made by the person that does the reserve study. So the answer is yes, it will get updated, but because it's only every 5 years, you got to keep a little track of it, of the projects over the last 5 years that either did or did not get completed, so you can make an adjustment.
Okay, thanks.
No problem. All right. So again, that reserve equity section is super important. Long-term savings, make sure it's adequately funded. If it's not, let's figure out why for your association. All right, so the other equity section is owner's equity. And a lot of times people have trouble with owner's equity. What is that? Owner's equity actually is the good stuff. This is, to compare it to your own personal living situation. And this is what's left over at the end of the year because maybe you and your partner have lived really frugally and you have $10,000 left over. That's going to be your equity at the end of the year. It's your, we're going to go to Las Vegas and have a great time money. For associations, please do not take the money and go to Las Vegas. But if you have positive owner's equity, which is what you should have, it's because you need to have operating capital. And again, this goes back to what we talked about at the earlier part of the year, right? So you want to say, is your retained earning positive or negative? Retained earnings are the results of your operations from the time that you started until the last day of the previous year. Is your net income positive or negative? That's your results for this year, right? This fiscal year. And is your total members' equity between 10 and 20% of your annual assessments? 15% or more is the goal. Now, you all may remember on the second slide, we had those same set of numbers for cash. We wanted your cash to be between 10 and 20% of your annual assessments, with 15% or more as our goal. And that's because, again, in a perfect world, the same way I said your reserve equity would match what you have in your reserve accounts, in a perfect world, your members' equity would match what you have in your operating account. Now, let me just say, I don't live in a perfect world. And even with all my little accounting, knowledge, I'm never going to have these numbers match exactly, but I want to try and get it to be pretty close. In this case, if you look at members' equity, the first thing I said, look at your retained earnings. So in this case, you can see that's a negative number. So that means that from the day this association started through today, through the December 31st of last year, they actually lost money. And so, they need to understand why they lost money. And in most cases, when you're losing money, you need to make some kind of adjustment. You need to adjust your budget. You need to have a special assessment, but you can't keep losing money. And then the net operating income for this year is, again, a negative number. So again, they're losing money again this year. So in this case, probably should have a conversation about what are their budgeting practices? Are they refusing to raise their rates? Are they just getting unlucky? I mean, lots of things that can happen. I don't want to, there's not often an easy answer. Lots of things can happen. Frankly, one of the things that could happen is that they perhaps in the past paid a reserve item, but it wasn't classified as a reserve item. It was classified as an operating item, and it was misclassified. That could affect these numbers. So there's not always an easy solution here. But again, if you look at your property, you look at the last 3 years, for example, and you're losing money every year, that's probably a pretty good indication that you're not budgeting correctly. And so you need to pay attention to this members' equity section. It needs to be healthy. It needs to be, again, between 10 and 20% of your annual assessments, and should be funded by the cash in your operating account, because those two numbers should be pretty close to each other, the same way your reserve equity and your reserve accounts should be pretty close to each other. So this is, in my mind, over time, my thoughts on this have developed, and I really think that these are two of the most important concepts to understand about what your accounts should be versus what they are. And then what do you need to do to set out a plan to make sure you're healthy? Because in this case, this association looks like they may need to make some adjustments to how they're budgeting, and they may need to do a special assessment to replenish their reserve accounts. Again, I have to dig into it more, but I'm trying to give you at a glance, looking at your reports, what kind of information can I glean? If you have a negative equity number, you probably need to have a conversation with your manager and or somebody on my team to help you understand why it's negative and if action needs to be taken. All right, moving on to the statement of revenue and expenses. This is pretty easy for most people. Revenue is what's coming in, expenses are what's going out. I think there are a couple of things to pay attention to here. So you want to review the monthly and year-to-date numbers. And I generally try and pay more attention to year-to-date because in one month, anything could happen. You get an expense that's unexpected. But the question is, for the year, how are we doing? And are we going to be locking in a surplus or locking in a loss? Okay. I tend to focus on variances that are more than 10%. And I want to review the second report, which follows your statement of revenue expenses, which gives you a 12-month view just to make sure that, hey, it seems like we're missing bills or not getting bills here on a regular basis. When you look at your statement of revenue expenses, I think one thing you want to make sure you understand is that we do our reporting in what's called modified cash. And so, not to throw too many accounting terms out there, but your assessments are done on accrual. The assessment number represents the total you should be collecting. It does not represent what you actually collected. The total assessment recommends what you should, it's the total amount billed to people. If you want to know how much you actually collected, then you need to look at your receivable report and see if anybody didn't pay for this month.
Sam, I'm sorry. I
On your-
missed a question on the retained earnings that was in the chat. It's if you have a positive retained income, are you required to issue it back to owners at the end of the year?
Absolutely not. So again, because we do zero-based budgeting, at the end of the year, the year doesn't work out perfectly according to your budget, right? I mean, I've never hit zero for anybody's budget. I've come close sometimes, but never hit zero. So you might have a small surplus. Sometimes you might have even a medium-sized surplus, and then other years you may have a small loss or not. So the number should fluctuate, but again, you should be within that 10 to 20% of your assessments. It's not about giving it back. I mean, because we don't really budget for profits, there's not going to be too many situations where you have a lot of profits to distribute back. The truth is, if I saw an association with a lot of retained earnings that was way beyond 20%, I would imagine that probably their reserves are going to be too low, and that really what needs to be done is we need to move some of that retained earnings onto their reserve section.
Thanks, Sam.
No problem.
You ready
All
for
right.
the revenue expense sheet?
Yep, that's a statement of revenue and expenses. So again, it can be a lot of numbers here. So the first three columns are the monthly information, the actual for the month, the budget for the month, and then the variance for the month. And so again, on the assessment up top, that's the total assessments that were charged, not collected. And the expenses and other income are listed as they actually happen on a cash basis. So I try and focus on things that are maybe a variance of 10% or more, just to see if it should call my attention to it. There might be a perfectly good explanation. For example, you might have let's see, what would be something that would be an example? You might have postage that it was $80 this month and the budget was $10. Well, it might be because it was the month we sent out notices to everybody. We had to do them by mail, and so that was higher than normal. And so you can look through, but like I said, those first three columns are for the current month. The other three columns are year to date. And the reason I try and focus more on year to date is because obviously year to date means as you move along the year, you have fewer and fewer chances to actually have an impact on this, right? Like maybe we need to cut some expenses here, not spend some money during the year if we think we're going to have a loss, because we really want to end up the year not having a loss. So is there something that we could not spend money on for the rest of the year? So I try and look at this, those numbers and look at that and look for variances that are large that might be affecting this. And then ultimately I want to get to the second page. Sometimes it's the third page, but in most cases it's the second page, which has a bottom line. Mary, you want to go to the second page?
Trying to. There we go. Take out the bottom line.
Well, yeah. And so again, you can end up at the bottom line. And the income statement is broken down into big categories: administrative, contracts, maintenance and repairs, utilities. If you have salaries, it'll be broken out: salaries, insurance, and reserves. So you can look at each of those sections and see what's going on.
Okay.
Oh, I should mention that all the way to the right is the annual budget for the year. The annual budget for the year.
Talking about over here, guys.
Yeah.
So
I will just say the majority of our associations do pass a budget. I can't emphasize strongly enough how important a budget is. I know some people will argue with me and they'll say, well, it's just best guesses. My point to them is that it's really a map for success. And you need to have goals. Everybody needs to have goals, I think, to succeed. And your association needs goals as well. It also helps you understand where you are and gives you a map on how to get to success. And so if for some reason your association has not passed a budget, I strongly urge you to look at the budget we provided to you and pass a budget. All right. The next section is the general ledger. Now, this is going to be the section in your report that takes up the majority of the pages. It's going to be anywhere from 15 to 40 pages long. And if you're not an accountant, it could be pretty daunting. What I've tried to say to you here is that a lot of times people want to see, like, who was that expense paid to and how much was it? And the general ledger has, the beginning of it is a lot of balance sheet items, which won't mean a lot to most people, and that's fine. But then you're going to get to things that are pretty understandable, which are your expenses. And it will tell you for each expense who was paid, when they were paid, and how much they were paid, and have a description. Hopefully your managers put in a description that makes sense. But this is where you see here, now I'm just giving you an example. You get down to the 5,000 section, that's the numbers usually for your expenses. And you can see things like fire control systems contract, janitorial contract, pest control, all these things. And you should recognize the name of the vendor. Like if you look at pest control, it's Home Paramount Pest, commercial I think it says commercial premium green, multi-pest control, 12/13/2023. I mean, this is the December report. It makes sense that you're paid in December. The amount is 212. Hopefully that also is going to be the right amount. You'll recognize that amount. But you just get the kind of information that a lot of people ask for. Again, as a board member, you can access all of this information online. If you want to go look up specifically and see how much have we paid Home Paramount this year, you can go to online in your board section. There's a place there called invoices. You can put in the specific name of the vendor you want to see, and you can put specific dates you want to have covered, and it'll give you a nice list right in front of you.
Shameless plug for last month's webinar. If you go to EJ for Real Estate's Lunch and Learn section, we did a board portal webinar last month, and it goes through how to do what Sam's talking about. So if you weren't in last month's webinar and you want to know how to do it, you can watch that. And we have instructions on how to get what Sam's talking about. Thanks, Sam.
No problem. Thank you, Mira. So just to reiterate, on our website, there is a section you can go to see these recordings. And if you want to learn how to use the portal, go there and check it out. Anyway, if you want that kind of information, the general ledger is where you're going to find that information. And I'm just pointing this out to you so that you can look for it. And then the expense section is only going to be probably 5 pages long. It's just a small part of the general ledger. So you're going to be skipping the top part of the general ledger. And then it's pretty obvious when you get to the expense section, and then you can see the name, the date, and how much was paid to the various vendors. Bank reconciliation report. So as part of the accounting process, every day we get transactions, money coming in and money going out. And every day we reconcile those so that the bank account matches what we have on the books, so that it's reporting to you correctly what you have available to you. At the end of the month, we do something called a bank reconciliation, where we actually get the statement from the bank and we match it to what we have on our books, make sure they match so that when we give you this report, you have your correct cash balances and you have your correct expenses listed and all those things. So there is a report at the end of your monthly report that shows you. And a couple of important things here are, if we don't have access to some bank account, then we can't close out your books adequately. In other words, we're not reporting everything to you because we need to get confirmation from the bank. So there are some cases where boards have control of accounts that we don't have access to. We need to get those statements every month. And so when you go to your reconciliation report, at the top is a list of all your accounts. And on the right-hand side, it'll say balanced or out of balance. If it says out of balance, let's focus on that and get some kind of system set up so we get those monthly reports. And then it's also, thank you, Mira. So you can see over here on the right-hand side at the top, it says balance. So that means that this association has two accounts, and we're getting the bank statement and we reconcile the statement. So we can say with great confidence, this is what happened in your bank account this month. Right below that is something called unreconciled items. And we should be looking at these. We shouldn't have items in here that are over about 60 days because vendors don't sit on checks. So if there's something here that's over 60 days, it's probably an issue that we need to be looking at and just saying, do we need to reissue a check to a vendor? Did we pay the vendor online and we issued a check? So the check has to be voided. It could be lots of things that contribute to this, but it's just a little bit of cleanup that you want to do to make sure that people are getting their checks and getting paid. Otherwise, you get vendors that complain. You don't want that to happen. And then below that is all the reconciled items. And then after this is actually going to be copies of the bank statements themselves. And you can actually see the bank statement as we see it. And our bank statements with NCB actually give you copies of checks that were actually written. So you can actually look at the checks themselves if you want to see a copy of the check themselves.
Sam, question from one of the clients that came over from Roost. Do we have an estimated date of when their financial information will be imported, so that currently their EJF statements say that they have zero balance in reserve, which would be.
Thank you for that question. Actually, I'm going to send out a report. I'm going to send out an update today to all the Roost boards, but we closed out December last week. And so we are working now to get that information updated into the system. And so we hope by the end of the month, we'll have all that done. So we'll put out a January report that will not have all the updated information, but we want you to be able to see the income and expenses that happened for the month so you can see what's going on. But then for your February report, we will have all the information from Roost over and you get a full financial report. So thank you very much for that question. I appreciate it. We are working hard on it though, I can promise you. On the bank statements themselves, you can look at the checks and the names of the vendors. This is just a kind of a check that you should do. If you see a check that has a vendor name on it you don't recognize, as the treasurer or a board member, you can look up in your system on your board portal and see the invoices for that person or that company, and then you can verify what it is. It just might be a name you don't recognize, but there's a real invoice and you'll recognize it. Or if you can't find any information on it, then you should ask your manager, who was this check and what was it for? Because I don't recognize it at all. Last but not least, if you have investment accounts, and not every association does, but if you do, then you just want to try and be aware of when their upcoming maturity dates are, any cash balances that are sitting and are not earning interest, and what the interest rates are on the accounts that you do have. So this is important because up until about 2023, your opportunity to earn any money on the money you held was pretty slim. Banks were paying literally 0.05% or 0.01% on some accounts. You just really weren't earning any interest. I hope most of you are aware, but if you're not, the interest rate environment has changed dramatically. And now you can earn 4 and 5% sometimes on your money. And so again, there's different kind of accounts and how they're held. But if you have some money market accounts and you have some CDs, we want to make sure we're maximizing your returns. At EJF, at the end of last year, we actually rolled out a program to review these. And we've been proactively sending information out to boards, letting them know if we found instances where we think we can increase your rates of return. We have a specific person in our shop, his name is Tom Zork, whose job it is to talk to boards about these things, review some options, and then execute on them to try and increase your returns. Does it make a difference? If you have $100,000 and you were making 0.05%, which is $500 on the money, but you could make 4%, which is $4,000, then to me, it makes a difference. That's increasing your return by 8 times, right? 500 to 4,000 is 8 times as much money. And you want to take advantage of that for your association because this is technically free money, right? This is what banks are going to pay you for investing with them. So you want to make sure, because if the banks are in charge of doing this, they're going to give you the lowest rate possible because they're interested in making money for themselves. But if you're paying attention to it, or you're working with Tom on my team to do that, then we can possibly increase your returns. And we want to try and do that as much as possible. We have actually some relationships with other banks set up so we can make the transactions really easy for you. We can walk you through the process, but we want to make sure you're earning as much as possible. There's no use missing out on free money for your association by increasing your rates of return where possible.
Question from the chat. Is it ever beneficial for an association to have a credit card or a P card to pay for some expenses?
So beneficial is kind of an interesting word. I would say to you that sometimes for certain size associations, it's convenient to have a credit card. But in general, 99% of our associations do not have a credit card because we should be doing business with people that will send us a bill and then we will pay the bill. So I think that's the easiest answer. It's not really beneficial in any way, but sometimes it's convenient. I have associations that have 200 or 300 units. I have a full-time staff of 4 or 5 people. And, even though they could get an account at Staples and order things, just sometimes you have this need where they need to do something right away. So they use a credit card. But for the vast majority of our associations, it's unneeded and not necessary.
Is the common area program available to our financial only clients? Sam, can they work with Tom to do that?
Yes, 100%.
Okay.
And there's no charge.
Thank you. And I think that's our last slide, right, Sam? Yep, it is.
It is the last slide, yes.
Are the investments accounts through NCB on the through common area? And go ahead, Sam, on that.
So we have established relationship with multiple banks to try and get good rates and make things easy. The paperwork is often what's the most challenging part. I can just tell you from my point of view, getting access to some accounts that boards themselves don't even have access to is a real stumbling block for us. And so we have a relationship with, I think, 4 or 5 different banks now where we can offer a variety of rates on money market and CD accounts. But more importantly, we've made the paperwork really easy for you all to do. And in some cases, board members want to be in the accounts. In other cases, they don't want to be in the accounts. It doesn't matter to us, and it doesn't affect your rate of return. But it's not just NCB is the direct answer to the question. We have other banks, and we give you a variety of things to choose from. And there are things to consider. I just say a little bit. If you have $100,000 in reserves, and that's all you have, it may be that there's you just want to get it in a money market account because there's not a good reason for tying it up in a CD. Now the truth is, right now, CD rates and money market rates, there's not a big disparity. So there's not a lot of incentive to tie your money up in CDs for even 6 months because for the extra 0.02%, it's just not worth it. So you just put it in a money market account and you get 4% or 4.25%, and that's great because you were only getting 0.2% before. And one thing I'll say also is that if you have an account at like a Payne Weber or a Morgan Stanley, you need to make sure that you're paying attention to how much of those funds are invested and then how much is sitting in a cash account, because those accounts are going to pay you zip. They're going to pay you like 0.01%. They really don't pay a lot on their money market accounts. Sometimes you can ask and they'll pay more, but we have found in general, we can get you much better money market rates. So if you're not going to invest that money, and there may be good reasons not to invest it in a CD, then let's get it in a money market account that's earning more for you.
Sam, question for you that I know is near and dear to your heart. Do board members need to be on their HOA bank accounts as signatories?
Board members do not need to be on the bank account as signatories. You have full access to your information. You ultimately do control the account because you're on the board. So sometimes board members want to be a signer on the account. We can make that happen for you. But in the industry as a whole, the way we have it set up is the way that it's generally done is that you're not on the main operating account or the main money market account. So again, yes, you could be. Do you have to be? No.
Okay. What's the process if they would like to be?
They can send an email to their manager and say they want to do it, and the manager will pass it on to us, and probably Tom or Paul or my department will reach out to you. You'll have to supply your name. You'll have to supply a form of ID, a social security number, and your address, and then we can add you to the bank account.
Okay.
And I just to be clear, I don't want to appear cavalier in any way. Where if you want to be a signer on the account, we can do it. Are there some risks? There are some risks in the sense that if a board member gets on the account and nobody's paying attention and the board member steals the money, that's always a risk. And so a lot of board members don't want to be on for that very reason. Like, they don't want to be in a position where they could ever be, accused of having taken the money. And so, but if you want to be in the account, we're happy to have you on the account, and just send your manager a request and we'll take care of it.
So is the monthly financial document what should be provided to the tax accountant for the annual tax return?
The December report is what we will provide to the accountant to do your tax return. In most cases, we offer and we do your tax returns for you. We have a low rate in order to get the return done. In some cases, or if you're audited, usually your auditing firm will do your taxes as well. But we give them access to Vanica, our system, so they have all the access they need to do all the research they need to do and to get the up-to-date financial information to do your tax return.
Do board members ever get compensated for their time or efforts serving on the board? It's just determined by the bylaws.
This would be determined by the bylaws. I can just anecdotally, I can tell you that I think it's a really bad idea for board members to be compensated. I think it will breed a lot of discontent. I think especially because the board's in control. So if the board is paying itself, you can imagine how that looks to people. I can tell you, out of the 520 associations that I manage, I only have one board that I've ever seen pay itself. That's probably a pretty good indication that you shouldn't do it. And in some cases, the bylaws specifically prohibit that you're doing it.
I was going to say, I've been doing this for almost 25 years now, and every set of documents I've ever seen specifically says the board members shall not be compensated.
Yes.
So, can board members log in and have viewing access to their bank accounts?
So again, you have access to your bank account through your board portal. You can see the transactions in the same way that we see them. It's not the same as you're logging on to your bank account. And if you want to have that, we can arrange for you to have that. But you already have it. I mean, you again, go to your board portal, go to banking, and look it up. You see the transactions as they're being posted to your account. I'd say there's maybe a 24-hour delay in there, but I mean, you're really getting them because we're reconciling your bank account every day.
And so I just want to clarify what Sam said there, Sam, just because you're not going into NCB to see that. What you're seeing is the reconciliation that comes daily from NCB. Because I think what was being asked was directly seeing NCB, right? And that's not what's in the board portal.
Right. In the board portal, you see the same thing with a slight delay because NCB sends it to us, and then we go in and we double check and make sure that it's correct, and then upload it, and then you see what's uploaded. So there might be about a 1-day delay for us uploading the information. If you want to get direct access to NCB, we can arrange to give that to you. I have about, I don't know, maybe 10 board members that have this, but it's just another sign-in you have to have and to get that information. But if you really wanted to have it, we can arrange for
it. Question in the chat that some invoices for an association state that payment received within 15 days will qualify for a 2% discount. How can they ensure that their bills get paid within 15 days?
We would just have to make sure that we know that that's the case, and we would have to put a kind of a special alert on that. I just had to be, we'd have to have a special knowledge of that to make sure the manager's aware. We need to see how they're sending the invoice. Are they sending it by mail? Or are they sending it by email? So we get it in time. All invoices can be sent either by email, which obviously is quick, and then they get uploaded. It usually takes about 1.5 days is our average time to upload. And then your manager approves it, and then it gets paid. And if we pay it by check, obviously that then gets mailed to them. And so do they count the date on the check, or do they count when they actually receive the check? Do they accept credit cards that we can pay by credit card? In most cases, they're not going to give you a discount if you pay by credit card, but they might, how can we pay them? Can we set them up on ACH? So there's several factors involved there. But if you know of something, account like that, bring it to your manager's attention and make sure he gets in contact with our team here so we can make sure we can flag that.
Who should a board member contact to discuss investment accounts? Do they go through their manager, or can they go directly to Tom?
They can go directly to Tom, or they can go through their manager. The only reason I send you through your manager is so you have fewer emails you have to remember and that kind of thing. But if you want to send it to Tom, it's tom.zorc, ZORC, like cat, at ejfrealestate.com.
Actually,
Tom
Sam, I
Zorc.
think Tom is legacy. I think Tom is just Tom at. Let me check. Yeah, I'll check it real quick because I email him. Yeah, Tom is just Tom at EJF Real Estate.
Oh, sorry. Tom's been here about 15 years.
Yeah.
So at that time, emails were just the first name.
Right.
So it's just Tom at ejfrealestate.com, but you can do either way.
Okay. Do we ever merge financial statements with existing reserve studies?
I think the question would be, would we add the reserve study onto a financial statement? And the answer is no, we would not.
Okay. What's the process for submitting a request for reimbursement? For example, I go out and buy bulbs and the board approves. Who do I send the request to?
You should send a request to your manager, who should pass it on to, I mean, you're just like a regular vendor in that case, right? We just need the manager will pass on a check request, approve it, and then you'll get sent a check.
I forgot to say we're in the Q&A portion of the time. So if anybody wants to actually unmute and ask a question, just raise your hand. We've had active questions in the chat, so I hadn't had a chance to say that yet, but we don't have any open questions in the chat. So I want to make sure that if you're on the call and you want to actually ask a question, just raise your hand and I'll unmute you. So.
Okay. I will add one thing is that your financial reports come out on the 15th of the month. And so they all come out on the same day, on the 15th of the month, so you can know when to expect them. For the Bruce properties, you might be a little late this month, but by February, by the February report, we'll be into our groove on it.
And I will say that you will get a notification via email with the attachment. And then you will also, those are available in the portal, and you can go back in the board portal and get your financial reports for every month that EJF has produced them.
You can also get a copy of, in your board portal, in the document section, there's a specific folder for monthly reports. There's another folder for invoice images. So you can just look at the invoice images for just this month. So it's easy to see. They're not in alphabetical order. Sorry about that. We can't get that done, but they are all there. And then there's also another folder for bank statements. If you want to isolate and just look at the bank statements for this month, you can isolate and look at those.
So I'm not seeing any more questions or hands raised. So I'm going to give it another minute or so, but otherwise I'm going to say thank you to everybody for attending. And I appreciate all the feedback. Sam, do you have any last thoughts that you need to share?
Well, I appreciate it. I know sometimes these things can be overwhelming. And so if a lot of this was new for you today, maybe just focus on one or two things in the next month and then kind of build each month. The other thing I'll emphasize is that if you kind of do these things each month, like anything, if you practice, it'll be easier and easier. I'm always trying to be aware of that. Not a lot of people aren't numbers oriented, and it seems overwhelming to get a big report. But if you take some of these things, and I know rewatching this video sounds like as much fun as waxing your car, but if you do rewatch the video of certain portions and try and understand, you'll get a greater understanding, and it'll become easier and easier.
Sam, what's the charge for tax returns this year? That just came up in the chat.
I think it's $425 for your federal and state returns for condo associations, and I think it's $625 if you're a co-op, which is a more complicated return.
Okay. All right. Well, thank you, everyone. Oh, who do we reach out at EJF to have someone walk through their accounts? Is that
I could walk through what? I couldn't hear the lessons.
The question is, who should they reach out to if they want to have someone walk through their accounts with them?
Lisa Coffey is the person you want to reach out to if you want to have an in-depth discussion on your, information, and if you feel like your manager, doesn't have all the answers. So Lisa Coffey, and it's Lisa and Coffey is spelled COFF Frank EY E-Y.
I dropped it in the chat too.
Oh, thank you. At ejeffrealestate.com. Again, you can contact your manager and say, hey, I want to talk to somebody more in depth on my financials, and they'll also reach out to Lisa, and so it'll work as well that way. But if you want to reach out to Lisa directly, please feel free to do so.
Okay. Does the board need to initiate the tax return process, or will EJF do it, Sam?
We'll do it entirely for you.
All right. Okay. Well, thank you all. This was a great session. Really good questions today, so we really appreciate it. Probably by Monday, this will be available on the website. And what we'll do is we'll send out a notice once it's up, and you'll be able to get both this video recording as well as the slide deck that Sam presented. So I know he just mentioned how fun it would be to rewatch this, but you also can just have the annotated version with just the presentation he made. So again, thank you all so much. We really appreciate you taking time out of your day to join us. So have a great one.
Thank you so much, everybody. Appreciate it.